Jensen Huang just put a $200 billion number on a market that didn't exist until now. Not data centers, not GPUs, CPUs, built from the ground up for AI agents. If he's right, Nvidia isn't just riding the AI wave, it's about to own a brand new piece of the stack entirely. Here's the context that makes this significant. Nvidia has dominated AI compute through GPUs, the parallel processing chips that power model training and inference. But AI agents are a different workload. They don't just run inference in bursts, they orchestrate tasks, manage memory, coordinate tools, and operate continuously. That demands a different kind of processor, one optimized for the control plane logic of agentic systems rather than raw matrix math. Jensen Huang is saying Nvidia can build that chip and that the market for it will be worth $200 billion. That's not a rounding error, that's a category. What makes this credible is the timing. Enterprises are actively deploying AI agents right now, and the infrastructure underneath them is still being figured out. Nvidia isn't speculating about a future market, it's watching demand form in real time and moving to capture it before anyone else defines a category. The risk is execution. CPUs are not Nvidia's historical strength. That's Intel and AMD's territory. But Nvidia has shown before that when it decides to own a layer of the stack, it brings serious engineering resources to the fight. So Nvidia is betting big on the infrastructure layer underneath AI agents. But building that infrastructure costs money, a lot of it. And our next story shows exactly how much because xAI's books are finally open. We never had a clear public picture of xAI's finances until now. SpaceX's IPO filing dropped this week, and buried inside it is the first real look at Elon Musk's AI operation. The headline number: xAI lost $6.4 billion in 2025. That's not a startup stumbling, that's a deliberate, aggressive burn from a company trying to close the gap with OpenAI and Anthropic at extraordinary speed. The filing also makes clear that spending isn't slowing down. Musk has outlined plans for a massive expansion of Grok. More compute, more data, more capability. The implication is that losses in 2026 could be even larger. What's interesting here is the structural angle. xAI's finances are only visible because SpaceX, a separate company, is going public and had to disclose the relationship. Without that IPO filing, we'd still be guessing. That tells you something about how Musk has structured these entities, tightly interlocked with financial exposure that crosses corporate boundaries in ways that aren't always obvious from the outside. For anyone tracking the competitive dynamics of frontier AI, these numbers are essential context. xAI is spending billions to chase the frontier, but our final story today is about the company that may have just figured out how to actually make money at it. Anthropic is reporting its first profitable quarter. This is a milestone worth pausing on. Anthropic has told its investors it will more than double revenue this quarter, hitting around $10.9 billion, and that this will be its first profitable quarter. For a company that has raised tens of billions in funding and spent aggressively to develop Claude, this marks a genuine inflection point. It's proof that enterprise demand for frontier AI isn't just hype, it's converting into real recurring revenue at scale. The revenue doubling is the detail that stands out most. Going from roughly $5 billion to nearly $11 billion in a single quarter isn't organic growth. It's a signal that Anthropic has landed major enterprise contracts and that Claude is being deployed at significant scale inside large organizations. Profitability also gives Anthropic negotiating leverage it didn't have before. With investors and partners, and with customers who want to know their AI vendor isn't going to run out of runway. It puts pressure on every other frontier lab still burning cash to show a credible path to the same destination. The economics of AI are starting to resolve, and Anthropic just moved to the front of that line. Step back and look at what these three stories are actually saying together. Nvidia is identifying a brand new hardware category built around AI agents. xAI is burning $6.4 billion a year to stay competitive at the frontier. And Anthropic just crossed into profitability on nearly $11 billion in quarterly revenue. These aren't isolated data points, they're three different views of the same underlying shift. AI is transitioning from an experimental technology into an economic system with its own infrastructure, its own capital flows, and its own winners and losers. The Nvidia story tells you the infrastructure layer is still being built. We don't even have the right chips yet for the agentic workloads that are coming. That means the hardware investment cycle is entering a new phase, not slowing down. The xAI story tells you what it costs to compete at the frontier when you're not yet profitable. $6.4 billion in losses isn't a failure, it's the entry fee for playing at the top level of this industry. The question for Musk is whether Grok can find the same revenue trajectory that Anthropic just demonstrated. And Anthropic's profitability is arguably the most important signal of the three. It shows that the unit economics of frontier AI can actually work, that you can spend aggressively on compute and research and still build a business that generates more than it burns. That changes the conversation for every investor, every enterprise buyer, and every competing lab still in the red. Here's a question I want to leave you with. Drop your answer in the comments. Anthropic just hit profitability while XAI is still burning billions. Does that gap matter long term, or does Musk's infrastructure scale eventually close it? If you enjoyed today's content, hit the like button. If you want sharp, no-hype AI coverage on a consistent basis, subscribe. We're here all the time breaking down the stories that actually move the needle.